Welcome to this analysis of UK defence stocks, and I'll also be doing a bit of a stock filter. Please remember this is for entertainment purposes only. So there's obviously a clear thesis as to why one may want to invest in UK defence stocks. In 2022, when Russia invaded Ukraine, we seem to be entering into a new Cold War period. And then more recently, with Trump's attitude towards NATO and the EU regarding Ukraine, it looks like that the world may be entering into a tripolar situation where you have the US, Europe, and red team power blocks. So this even more so points us towards defense stocks as a investing idea. It's the invasion of Ukraine. Most of the stocks kind of doubled or more in price. Ever since we had Trump's apparent abandonment of Europe in favor of Russia, we've seen a spike of at least 20 or 25% for most stocks. Of course, the EU recently announced that it was going to print out of thin air $0.8 trillion to spend on defense. So we want to be looking at companies exposed to Europe. And I'm also interested in which stocks offer us exposure to the drone warfare phenomenon and also electronic warfare to counter that drone warfare. The overall weight of this idea of investing in defense stocks is that if you look at the Cold War, the US used to spend over 8% of GDP on military spending, and that's reduced to less than 4%. And for the UK, we used to spend over 6% in the Cold War, and that's dropped to 2%. So if we really do enter a new tripolar world, we could expect to see the defense spending increase massively actually from where it is now. So first of all, to take a look at the aerospace and defense sector as defined in the UK markets, and actually the first thing is that over 90% of its composition is just two stocks, making it kind of a rubbish index anyway. But then even worse than that, 53% of it is Rolls-Royce. And as I'll cover shortly, Rolls-Royce actually only have a fraction of their revenues coming from the defense sector. So unfortunately, the actual sector graph is fairly useless. And so you have to actually look at the individual stocks themselves to get a better kind of technical view. So here's all of the UK defence stocks. And the first thing is that actually RC Formax, they've only recently IPO'd. And so I can't find their financial report. And there's very limited price data for them. So I have to delete RC Formax from my stock filter because there's just nothing for me to analyze. They only really do HR and project management related to defense anyway. So that leaves me with these 12 stocks. So to start with Rolls-Royce, it turns out that actually only 25% of their revenues come from defense. Now, they're very interesting because 24% of their income is from power, and I'm very interested in their gas turbines, and also they've got a big nuclear power segment that's growing within them. So they're very interesting, but unfortunately, just not enough exposure to defence. So unfortunately, just not enough exposure to defence. But I shall certainly be adding them to my new ideas funnel. BAE Systems, they're the UK's largest proper defence company, and they're paying a 2% dividend with a fairly robust net income history. Yep, they've got a lot of long-term assets, and but unfortunately, they seem to have a lot of debts, which I don't like. And it's quite notable how big, how large their short-term assets and debt are compared with their long-term assets. And we see that most of these long-term assets are actually goodwill. And then when I look at their current assets, it's actually mostly trade receivable within 12 months. And their non-current and their current liabilities are mostly contract liabilities and trade payables. So we get this idea of a massive kind of bureaucratic company that's kind of a monopoly that has kind of a monopoly in that it's the only company that really the UK government can just dole out money for absolutely massive projects. And they kind of just eyeballing this and eyeballing the numbers here, I'd actually say they look kind of a bit inefficient in a way, which makes sense because they're like a huge bureaucratic kind of conglomerate. And yeah, and so there's just this massive swill of costs going in and out, and you wonder how controlled those costs are. And I don't like the debt that they have and how that's increasing. It's kind of doubled actually since the previous financial year. So that kind of points towards the big kind of strategic acquisitions that they must do. So yeah, the kind of the balance sheet side doesn't look great, but it kind of looks okay, I guess. But then they do have a massive increase, in fact, a doubling of their order book. And we see that they do have a lot of US exposure, which is kind of good, and a lot of rest of world exposure. So they're not just reliant on the UK government. So that's good. Looking at their revenue by business segment, we see it's 26% air, 22% maritime, 27% electronic systems, 16% platforms and services, and 9% cyber and intelligence. So obviously the air is an important one, and we see that their big their big ticket items there are the F-35 and Eurofighter Typhoon. So I looked into the F-35, and actually, by the way, 4 years ago, one of my first ever videos was on BAE Systems. It's a half an hour video, so take a look at that if you're interested. It's kind of outdated, but I just thought I'd mention that because back then I was wondering how successful would the F-35 be, but it's transpired since then that it's actually been a very successful aircraft. And I've got here a list of the orders. Now, actually, there is a risk that since Trump's recent attitude towards Europe, they could be losing a lot of F-35 deals. And actually, that could be just the kind of story to send the price down to then actually give us an opportunity to buy at a more reasonable price. Because actually, the vast majority, even if there were a load of cancellations within Europe, the vast majority of the planes to be delivered are all to the US anyway. So the F-35 side looks solid. And then the Eurofighter Typhoon turns out that actually that's had a bit of a renaissance in recent years, with lots of European countries snapping them up and new orders coming in. So the Eurofighter Typhoon looks very promising still. And then they're going to be building the Tempest. By the time this gravy train from the F-35 and Eurofighter Typhoon starts to wane, and I've got a lot of hopes for this aircraft. It's going to be a joint project between Japan, Italy, and the UK. Yeah, I think this is definitely a good reason to invest in BAE Systems. Certainly the air quadrant of their revenues looks very secure for many decades, with the Tempest offering particular spice. Then on the maritime side, okay, so they're just building now number 7 of 7 UK attack subs. Plus, there's an additional 5 ordered by Australia. These are nuclear subs, and then on top of that, they've actually just started to build one of 4 Dreadnought class nuclear subs. So for the maritime, there's obviously a solid order book for many years to come. So actually, half of their revenues are looking really solid here. Then they do like electronic systems that does overlap with the drone thing. and then 16% of their revenues are actually for combat vehicles, including the CV90. And this is actually a fairly successful Swedish infantry fighting vehicle. And what we've learned from Ukraine is that there's definitely a need for infantry fighting vehicles. And you can see all these operators and all of these orders coming in. So actually something I wasn't expecting going into this video is BAE actually look very, very strong on the vehicle front. Plus, the Bradley and these howitzers. We know that actually Europe's realised it's going to need a lot more of these than it thought it did Russia's following Russia's antics. And then on top of that, it owns 2 ammunition plants. And then there's the cyber and intel, which is 9%, and that's all good. But overall, it's got, you have to say that BAE Systems have got a very solid 50% of their revenue here in terms of the air and maritime projects. And then on top of that, some very promising things going on within their land division. And then also some perhaps overlap into the drone warfare with the electronic systems section, but that's going to require a lot more work. So certainly, so really, with the initial look at BAE Systems, I really need a lot more work's going to be needed to understand what's going on with their balance sheet because it doesn't look that great, to be honest. However, in terms of their order backlog and the robustness of their current portfolio of products that they're selling, BAE Systems are clearly a good candidate to be going through to my next round of analysis. So Babcock are paying only a paltry 0.7% dividend, and there's obviously something bad going on when we look at their net income trace here. Their share price has actually gone up quite a lot since 2022. So, immediately they're not looking as attractive as BAE Systems. Really, when I look at their balance sheet situation here, there's more short-term outflows and inflows, which is never a good thing. And they do have a lot of debt as well. So most of their long-term assets are goodwill, but also they have, compared with BAE Systems, a lot of property, plant, and equipment. They have colossal debt here. And then when we look at their current assets, it's actually mostly trade receivables and contract assets, with their current liabilities dominated by trade payables and contract liabilities. So actually, they're a similar kind of composition to BAE Systems, where they're just taking on big contracts, taking a skim, but there's a lot of churn here. 70% of they're a bit overexposed to the UK in terms of geography. And when we look at the company, we see that actually, although over a quarter, maybe 30% of their employees are in the marine segment, that's only 5% of their profit. And it turned out that the reason is that they won this contract for the Type 31 frigate to the Royal Navy, and so that's obviously very impressive. However, it turns out that they bodged the deal, and so they're actually manufacturing these at a loss. But there are like another 5 export vessels being manufactured, but still, that's kind of a bad start to this analysis here. Won a deal to make 5 of these frigates, but they're making them at a loss. They also do ship and submarine operational maintenance, and they run the UK military satellite network, which is called Skynet. That's quite interesting. Plus, they manage the UK military comms. And then they've got this other thing where they're doing liquid gas systems for civil shipping. So these things are all very interesting and spicy, but it's a shame about these Type 31 frigates, which are kind of a bit of an albatross for this company. Okay, by the way, it turns out that this massive drop here was where they did a load of divestments of the business. So the company was kind of a bit of a mess, frankly, and then they did big divestments to now focus on defence. But it's never good when you come into a company to analysis them and you see like a load of chaos in just the preceding years. Anyway, back to their different business segments, and nuclear is 45%. And this is where they actually maintain the UK nuclear subfleet, plus actually the nuclear deterrent. They do operational maintenance for that. And then they also manage some nuclear power stations, including new nuclear projects and also waste processing. So yeah, there's an interesting exposure to the nuclear energy thing here. Then the land business is mostly managing army bases and doing vehicle maintenance and things. They do actually manufacture this weapon called the Jackal 3, where there's an order to build 70 of those. It turns out though that actually this is owned this product is owned by a company called Supercat, and all that BAE Systems are doing is manufacturing them at scale. It's not actually their product. And then they actually sell up armored Toyota LC300s and what they call the Babcock GLV or General Land Vehicle, which is actually similar to the UK Army Land Rover. It's like an armored version of that based on the Toyota. So they've got profiles of these in their annual report, and this is their next big kind of weapon that they're saying. But it's kind of obviously a bit underwhelming. But actually, I could see them selling these because from what I've learned about the Ukraine situation, you get a lot of situations where you've got like small squads, like drone operators and things, zipping around, and you kind of want to be a bit less visual to kind of avoid getting hit by drones. So these are things that can be kind of more easily hidden away in a building or something once you've set up operations, and you need some kind of armor protection when traveling. So I could actually see this being a bit of a seller, but still, overall, the situation with their land is, yeah, they're not really making. They don't really own much IP in military vehicles themselves, or that they manufacture weapons for other people and do, of course, their maintenance stuff. So they're a bit underwhelming, but I can see that in the future, I can see people taking up their services, but the stuff they do is probably relatively low markup compared with a BAE Systems. And then they've got a 10% of their business is aviation, but that's really just training the air forces and air force maintenance. So overall, they're kind of more of a kind of services company than an actual weapons manufacturer. And so they're not really very inspiring anyway, particularly with this making the Type 31 frigates at a loss thing. So to be honest, these just do not really stand out for me. And then when I get hit by the frigate they're manufacturing at a loss, plus their very checkered recent history, plus the fact that most of their most of their revenues are really centered on the UK. For those reasons, I don't really see the point in looking at them any further. Okay, so on to Qinetiq, and they have a fairly robust previous net income history, and they're paying a 1.7% dividend. They're a lot smaller than BAE Systems. Their order backlog doesn't seem too impressive compared with BAE Systems, though, although they have got an increase in order intake. When I look at their balance sheet here, again, they're actually similar to the Babcock and the BAE Systems, where they've got a lot of swill going on here. And then, of course, when I look at their balance sheet, we see that a lot of their non-current assets are goodwill and intangible assets and property, plant, and equipment. So, okay, maybe a bit different, maybe a slightly different profile. And their non-current liabilities, unfortunately, dominated by debt. And then the current assets are mostly trade receivables, and their current liabilities are trade payables. So actually, no, they're not quite the same as a BAE System. The difference here is most of their business is actually running other people's army bases for them. And so they're kind of, I guess, pass-through cost situation. But they do also do take on projects as well. But they're definitely not like a manufacturer. They're more like a service provider. And so that's why we see them more similar to BAE Systems than a manufacturer would look. We see their revenue is kind of restrained to mostly the UK and then US, a big chunk. And their operating profit, their business segments are divided into EMEA services at 75%, 76%, and global services at 24%. Now, the EMEA services, that's actually, you can see here, a massive chunk of their overall revenues is just managing the UK's army bases, but that does include some where they're doing research and development projects. And then another big chunk here is actually UK intelligence. So they operate something to do with the UK intelligence services. I guess that must be kind of radar and monitoring of internet and things, and also cyber security. So we see that the vast majority of their overall income is basically just running army bases. And then the global services, this is where we get into the kind of gadgets and new development of new weaponry. A big chunk of that, although remember this is only 24% of the total, is actually where they're being paid by people to do research and development and prototype new projects, including the manufacturing. But also there's cyber security intelligence hidden in that number. So we're not sure how much of this is the juicy stuff. And then they have this UK defence and intelligence part, which apparently does, despite the name, include unit sales from IP spun out from their EMEA services. The thing is with Qinetiq is people were investing in them when they first IPO'd, thinking that they'd be coming out with all the most cutting edge new weaponry and be like trailblazers. But frankly, I can't really see any modern weaponry that they do that they're actually selling themselves. Their biggest seller are actually these training target drones, which aren't really all that awe-inspiring. In terms of robotics and things like that, they do make these land drone robot things, but these have been in development for 10 years, and I see barely any orders. I've still not seen these anyone buying these in any big numbers. And so when you look at the overall kind of image and branding of Qinetiq, I'm afraid there's not really much to see other than that they're kind of glorified facilities managers. And so they really don't inspire me at all. And then on top of that, the share price just crashed about 25% over the last 2 weeks because because they released an earnings downgrade. So Qinetiq are clearly a big disappointment and easy to remove from my shortlist. So now on to the Chemring Group, and these are paying a 2% dividend. They've got a kind of lukewarm history. This one's actually been properly updated. It turns out that actually this dip last year was because they sold off a non-performing part of their business. So otherwise it would be fairly comparable. We see that the share price has actually only doubled since the Russian invasion, making them potentially better priced than these other ones we've been looking at. They seem to have a different profile to BAE Systems and Qinetiq and Babcock. You see that actually their balance sheet actually looks way better actually at this first glance, because they're actually taking in more in short-term money than they're spending in short-term money, and they've hardly got any debt when you compare them compared to their peers. It turns out that this is because they're more of a out-and-out manufacturer than the likes of BAE Systems or Qinetiq. Their non-current assets are actually dominated by property, plant, and equipment. It's great that they've really got minimal debt, and interesting to see that they've actually got government grants here listed as a non-current liability. And this, I believe, is because Europe's actually paid them grants to set up some ammunition factories because of the Russian invasion of Ukraine. When we look at the current assets, it's mostly inventories and trade receivables, where the current liabilities are mostly trade payables. So this much more attractive kind of balance sheet, this reflects that they're actually a manufacturer without much debt, compared with the likes of BAE Systems, who are more of a kind of long-term service provider, kind of project management company, where the actual manufacturing is only kind of a smaller part of the overall pie. Another way of looking at it is that BAE Systems are selling you, big ticket, durable military products like warplanes and tanks, where a lot of the costing goes into the design and maintenance rather than the final unit manufacturer. Whereas Chemring are actually manufacturing disposable items. And so this, I think, reflects itself in the different balance sheet profiles we see. Now we see a very impressive uptick in the order backlog and order intake, even up to 2024. And yet their share price hasn't gone up as much as those others, so that's quite interesting. And they're even actually targeting a doubling of revenue by 2030. We see that what is attractive for me is they have a fairly big presence in Europe, and it's kind of more well balanced between the UK and US. And when I look at their profit by segment, we see that 47% is sensors and information and 53% countermeasures and energetics. Now, this countermeasures and energetics is basically explosives. Energetics is the kind of watered down term defense companies use because they don't want to say the word explosives for some reason, because it kind of gives them as not as nice an image. So they make, we see that a good chunk of this in terms of operating income is countermeasures. So these are infrared decoys, are basically flares, which they're actually building for the F-35, and then also build to help defend naval vessels. And then energetics is the bigger chunk, and that's comes from their subsidiary Chemring Noble, and they make HMX explosive, which are used for missiles. I'm not sure if these are anti-drone missiles or kind of cruise missiles or what, and that's for something when I perhaps go into more detail. But this is this is kind of, I think, one of the most advanced. This is, I think, one of the more advanced kind of explosives. So it's very impressive that they're making this kind of explosive for missiles in the context of a Europe which is having to increase its kind of capacity in this area. And they've also had a big order in response for Russia's invasion of Ukraine for MCX explosive, which is made for standard NATO 155 millimeter shells. Chemring Scotland, I'm not sure what that's for, but I know that they're building a factory in Scotland, and that could be linked to the kind of UK's new ammunition requirements. And then they do this, they've got this CED Chicago business, which makes actually stuff for NASA, SpaceX, and Blue Origin. So that's the kind of explosive release bolts when you get stage separation and that kind of thing. So it's kind of cool that they're making stuff for SpaceX. But yeah, so it's very impressive when you think, when you go back to what the main hypothesis here with relation to EU spending. Chemring are definitely hitting a lot of boxes here, and particularly things that could be relevant to drone warfare. And when you look at the war in Ukraine, a lot of it has been about missiles being fired as part of the warfare, and also defensive and offensive. And also we see their involvement in shell manufacture, which has become a lot more important than previously thought, and plays into the overall thesis here very well. They're the sensors in informatics. This is actually electronic warfare through the rogue business, but it turns out to be jamming, targeting, and reconnaissance. And then they've also got this bioweapon detection part of their business and drone detection. Now, more work needs to be done in terms of really working out how much of this is name dropping and how much of the drone stuff adds to this overall numbers. But it has to be said that Chemring are very good, very interesting, because they're a way of investing into the actual manufacture of expendables, rather than the other companies that are more kind of big ticket items where you're relying on big orders over long time frames. This is more interesting because they're more kind of consumable manufacturer, but they definitely really are ticking a lot of boxes here. And so Chemring are definitely going through to my next round of analysis. Okay, on to senior. It turns out that actually defense is only about 14% of their business, so this makes them fairly easy to eliminate. Okay, now Cohort, who are paying a 1.3% dividend and have actually the best net income history of all the stocks here. So Cohort have a very nice kind of balance sheet profile, but unlike the others, not much in terms of long-term assets. So they're clearly a kind of a manufacturer, but they've got a small market cap. So I think they're kind of, yeah. So they seem to be selling stuff only a few years ahead. So that's something we've got to watch out for, actually, if I spend some more time on them later. But they've certainly got a very impressive trend in terms of their order backlog and order intake. We see that they also have a great exposure to Europe, with 54% then exposure to the UK. So their business is 50% comms and intelligence, 50% sensors and effectors. So the communications intelligence, that's it turns out actually long-term service contracts for data management within the MOD, and also they do simulation training. They do military comms, and I think they've got contracts with the UK Army for that. Surveillance tech, naval satellite comms terminals, and then sensors and effectors. They do lots of sonar with. I know they've picked up lots of sales in their sonar and navies around the world. Actually, they have this chess dynamics product, which is drone detection and tracking. So here they've got their chess business, which clearly sells land-based anti-drone systems, which they actually call Hawkeye. And so they clearly do. They definitely are selling products that are anti-drone products. And then they have the C product, which is the naval version of that, which is for against any missiles being fired at your ship. So I think they can detect the drones and then fire flare, or detect the missiles and fire flares. So Cohort definitely have a great net income history, amazing looking balance sheet. Okay, they're long-term assets, so there's goodwill, which has stayed the same 2 years running. So that probably isn't contract related. We see if I look at note 9 there. Okay, so the goodwill that they list there is actually related to where they've acquired subsidiaries. So it's kind of a bit of a accounting artifact actually, where so I'd actually be a bit wary of that. So actually, they don't include goodwill here. Definitely doesn't include future contracts. I don't believe. It's more around short-term turnaround with this company. It's stuff that's kind of flying out the door within the next 12 months with them. And we see they have, however, very sizable combination here, an increasing combination here of inventories and trade receivables, as well as cash, stacked up against trade payables, and then very minimal debt, really, which is what gives them this really nice profile that I like here. They're looking very favourable, actually, compared with the others I looked at. But still, Cohort definitely are passing my initial look here of their net income history, balance sheet, and order backlog trend. The only problem is it's hard from looking at their annual report to get a real good handle on what are the main contributors here and how much how much of their future sales are coming from the drone and missile related stuff. I'm a little bit wary that they seem a bit overweight towards naval systems overall, but still they're hitting all the right chords in terms of what their products are doing versus the versus my overall hypothesis here. And so I definitely look forward to taking a closer look at cohorts. Next is Avon Technologies. Now, I've actually done a lot of videos of them in the past. The last one was 2 years ago. But as we can see here, they've got a kind of undesirable net income history and they can't cover their dividend. Now, as I covered in the videos before on them, go and take a look. I've actually got probably hours of footage on them. But unfortunately, they're not at all, they haven't really got a very impressive track record at all. So, like I say, take a look at videos I've already done. I did a quick checkup on them actually recently, and it's the kind of same story. The business that they have now is kind of barely turning a profit, and they're really not very inspiring. And what all they make is gas masks and body armor and army helmets. But as I go into in detail, if you take a look at these videos, a lot of the deals and some of the businesses they bought didn't actually work out too well, and they are struggling to pay their dividends. So plus they don't really hit any of the main things I'm looking for. So yeah, these are easy to eliminate. Okay, now MS International, and they have a fairly favourable looking net income history. They're a tiny company, only a tiny company with only zero point 0.2 billion market cap. But they're paying a 2% dividend. When we look at their balance sheet situation, again, this is more resembling cohort where uh, and it's good to learn to distinguish between these different types of companies within the defence sector. You've got the more kind of service stroke project management type companies like your Qinetiqs and your BAE Systems. And then you've got your more manufacturing type companies, and that's what MSI are. Most of their non-current assets are just property, plant, and equipment. They don't seem to have hardly any debt, which is great. And their current liabilities are just contract liabilities and trade payables, with most of their current assets actually just trade receivables, inventories, or cash itself. So a nice, actually, very attractive actually set of books, probably the most of all of them I've looked at. Okay, we see that they've got a fairly diversified revenue by geography, but unfortunately not much in Europe at the moment. But when we look at their operating profit by segment, we see that actually they make the fork part of forklifts, which is obviously a bit unusual. And then they also make petrol station superstructures, and they have a corporate branding biz. So that makes them obviously a bit of a curiosity, but fortunately, 81% of their operating profit is defense. So we can kind of disregard these and just focus on the defense here quite easily. And they only really seem to have two main products. So one is this, the DS-30M naval gun. It turns out has a Bushmaster 2 cannon on it. And the main thing is that it's able to remain. The main tech here is actually that the gun's able to. You can actually put all kinds of different guns and rockets on it. And as you can see, the important thing about it is that their product here, in the gun turret, enables the gun to be level, even if the boat or the tank or whatever is moving around all over the place. This is their promotional video, and the naval version here, which is this the naval gun version, that's already in use in the UK and these other navies, and also actually by the US Navy. It turns out though that this is actually a fairly old product, and it's on the Type 20, all of the Type 23 frigates and river class patrol boats. So yeah, it's impressive that this is already used by all of these Royal Navy ships. But they recently got an order to fit these auxiliary ships. And I think the reason why is there's become recently an apparent threat from drone boats. So you get these speedboats packed with explosives that the Houthis and terrorists like that have been using. So you can kind of see more navies around the world picking up, going for these as a relatively low cost option actually, um, to help combat these drone speedboats. So, and then they've got like a land version which they've called Terrahawk, and this has actually got sensors on to automatically detect drones, and it's designed as an anti-drone and anti-missile weapon. Now, apparently, one's been ordered for Ukraine, but so it's no orders. So overall, they've got an established kind of trickle of orders coming in for these naval ones. But if you invest in MS International, which by the way of 4x since 2022, so you're not going in cheap here. You're kind of taking a bet on orders coming in, particularly for the Terrahawk Paladin land version. Their current books are a picture of health with a great recent net income history. They're an absolute direct hit on anti-drone weapons and anti-missile weapons. But bear in mind you're relying on future orders coming in, but otherwise they definitely make it into my shortlist. Okay, so now Velocity Composites, who have a terrible track record judging from their dividend and net income. Actually, it turns out that most of their stuff is for aircraft and particularly commercial aircraft, so remove them quite easily from the shortlist. Then Chroma Security Solutions, who are a real mini, we really are getting down to the minnows here at 0.01 billion market cap. You can say they pay a decent dividend actually, but on checking them out, and check this out for an old school style annual report, it turns out that they're mostly basically a locksmith. So they do a lot, they do fire alarms, security alarms, and they're mainly a locksmith. So they're definitely not relevant to what I'm looking for. So I eliminate them. And then finally, Westminster Group, who obviously have a very bad track record in terms of their net income. And so they're actually kind of security contractors based mainly in Europe, and they do things like provide security for airports and things. But when I look at their income statement, right off the bat, they say that they're making a loss from operations, quite a big loss, a 4 million loss for the period. They've got roughly 3 million in trade receivables and cash, but are having to pay out 2 million in trade payables, and they've got about a million in current liabilities. So this company is clearly in a bit of a stressed state at the moment, plus a million in long-term debt. So Westminster actually win the prize of being the kind of worst candidate out of all surveyed. That leaves me actually with just these four companies, which I think have progressed through my initial stock filter. BAE Systems have a very impressive portfolio of long-term projects, particularly the air and maritime segments, with lots of promising future growth in the terms of Tempest to replace those. And then they actually shone in the platforms and services with the CV90 product that they have, and overall even have their and overall they even seem to have electronic warfare and anti-drone stuff, plus they even own ammunition plants. So BAE Systems definitely look like a good stalwart. It's just that I think there's some work that needs to be done to fully understand how they kind of functionally operate from the balance sheet perspective, because they have so much kind of churn, and because they're kind of long-term project based rather than a standard, rather than a kind of straightforward manufacturer. A closer look at their finances is required before I invested in them. Chemring are very interesting because they make more kind of consumable products. They definitely have a good exposure to the manufacture of ammunition and missiles, and particularly perhaps the kind of explosives required either for offensive missile systems or defensive anti-drone and anti-missile systems. And I do think that there'll be a proliferation of these within the EU as we reconfigure to actually be able to defend ourselves. I think there's a lot of potential there for Chemring, and then on top of that, they've got a big electronic warfare component as well. So yes, Chemring look very exciting. Cohort and MSI International were much simpler companies than these previous two, but with actually cleaner balance sheets, and they both score very highly in terms of being direct hits on the anti-drone warfare and the electronic warfare capabilities that I'm kind of looking for to take advantage of how the EU is going to be developing its military. It's just a question of a bit more work needs to be done here to help establish how certain can we be of future sales, and in particular, and actually overall, I'd say that Cohort seemed a safer bet, but we need to make sure that their kind of naval contracts, so there's going to be follow-ons from those. And then with MS International, they're making products that are definitely relevant to anti-drone warfare, but you've got to accept with MSI International that you really are taking a bet on them winning future contracts. You know, by no means is that for certain with MSI International. So, okay, that completes my look at the UK defence landscape in terms of our stocks that we have on the London Stock Exchange. And I've done a initial stock filter. Of course, all of the defence stocks have gone up in value quite a lot So there's no need to rush in. I mean, using BAE Systems as a good kind of reference stock, I think there may be an opportunity to buy at a cheaper price. So that gives me time to take a good look at these and try and work out if the future revenues have been correctly priced in or not. But superficially, if the world is going to change into a tripolar world and future GDP expenditure increases accordingly, then some of these price rises may actually be understated. But that's going to take some work to really go into the balance sheets and the future expected incomes for these companies, which I'll be doing over the coming months. I hope you found this video useful. Remember, it's entertainment purposes only, and good luck with your own investments. I do videos like this one just for fun as a hobby. It's for entertainment purposes only. Always consult a qualified financial advisor before making any investment decision.